Hello, YouTube. I'm your daily trader, Ben. First of all, I want to apologize for not having a video last week. Today, I do want to show you something a little special, though. All right. So, what are we going to be talking about today? Today, we're going to be talking about how to use support and resistance as deception, as well as what are liquidity inducements and how to use both of those things to identify price traps. Right now, to get into what a price trap is, let me go ahead and show you a little small diagram over here what I mean by price trap, right? Let's pretend that this is a point of resistance, right? Also known as an inducement. And let's pretend that this is a point of support, right? Also an inducement. Generally, what most people are expecting when we break resistance as a retail trader is that their buy stops here are going to get triggered, right? Breakout traders are going to try and go long. However, the market is generally going to trap those traders, right? This is a price trap. The same goes for the opposite, where this is support. Sellers come into the market, sell stop orders get triggered, right? And what happens? The market moves against them, right? Now, before I get into the graphs here and show you how all of this works, right? If you guys don't know how to read market structure, I really hope that most of you do, and I'm pretty sure that most of you watching this video already know what market structure is. But if you don't, please go back into my YouTube channel and look at the video where it's in the title. It's all about market structure for the most part, right? Anyways, let's come into the graph over here so I can show you exactly what I mean across all time frames. Now, we know that the market is fractal. So, of course, this is not just only going to happen on the daily. However, we do need to understand that the daily time frame, weekly time frame, monthly time frame, those higher time frames are going to give us direction as well. They're also going to give us a better understanding of basically where the market is going long term. Now, once we start moving into the lower time frames, that's when we are pretty much intraday trading. But I want to show you guys how to grab the overall moves using traps, right? Let's bring our highlighter out. What I want people to start practicing doing is marking out the higher highs, right, and lower lows. Now, this was a little different. This was a price trap. We are going to go over it. I'm going to show you what I mean. All right. So as you guys can just see, I have pretty much marked in all the higher highs and higher lows on the daily chart. Now, what I want people to recognize, all right, let's go ahead and mark this into, because it'll help explain the picture, just a little bit better. Okay. All right, now let's get into it here. All right, let's start with over here. So I want you guys to recognize how these price traps are really working. From this low to this high, we pretty much create a nice little range, right? What can we understand so far is that the market is in a downtrend, correct? Well, we can clearly see that we had a nice break of structure here, right? That the market has come down and completely broken through this point of support or has induced this low, right? As you can see, can you notice the rejection that is here after we have taken out this liquidity, right? The market has clearly pulled back a little bit, right? Generally, we are going to get this reaction almost every single time, or we can only hope for that reaction after we have induced a lower high. And generally, it can give us a pretty good understanding of direction. Now, considering that price has completely broken through this low, right? If you go back to my video on following the money, you would understand that because we have liquidated this low, this would validate this area here as a point of supply or a POI that's valid for shorting. However, you're probably wondering, Ben, you clearly got trapped. And that's what's important about understanding the highs and lows and inducements in the market, right? As you can see, this point of resistance, right, did what? It caused buy stop orders to get triggered, buyers entered the market, and look what happened. The market went the opposite direction, right? I can almost promise you here on the 4-hour, this is another high to low, right? And what happened? Sell stop orders got triggered. Sellers entered the market, and the market started to move up. Now it starts to have somewhat of a chain reaction, right? This is also a low in the market. If we drag this low over, sellers enter the market, sell stops get ordered, price gets trapped, and the market moves the opposite direction. Now, how can we use this to our advantage when we are trading? I want you guys to notice that when we wick an inducement like so, look how the market trends down for multiple days, right? After we have trapped price here, the market has 1, 2, 2.5. That's a joke. 3.5, 4.5 days of drop for the most part, right? Got to have a little fun with these videos. So basically 4 days of drop, right? Or just 5 days overall where the market has trended down, right? These inducements on the daily are going to give us our high time frame bias, right? Now, there are other ways to identify high time frame bias. If you want to figure it out, again, go back into my video on following the money, and you might be able to figure it out yourself. Right? But I want to go back to that little chain reaction, right? Notice how buy stop orders got triggered here. Again, this drags over, and look what happens, right? Market induces, comes down, induces, comes up. Now, I want you guys to realize that this is a low and this is a high on the 4 hour. I know that just through continuous back testing that this is a low and a high because this is a down candle, up candle, and this up candle tells me that this is a lower low and a lower high on a smaller time frame. The same way that this down candle here told me that this high to this low is fractal, right? May not necessarily be the 4 hour. I assume it's the 4 hour. Could be more clear on the 1 hour. I just know that these are making internal highs and lows on a fractal perspective, right? What does this tell me? Sure, the market clearly induced a little bit. You could have gotten a little intraday trade here, right? For around 20 pips. Who knows really how far that trended up? It could have trended all the way up here for 30 pips. Then, oops, I did not mean to do that. I apologize. Could have trended up for 30 pips and then trended right back down for 65 pips, right? As you can see, the market trapped a little bit of sellers right here. The market rejected, right? Most likely, if you're in this position, hopefully you would have taken partials, but if not, most likely you would hit break even. Price comes all the way back down, liquidates this low, sell stop orders get triggered, buyers, or really me, I enter the market here. We trigger buy stop orders right here as well on the 4 hour, right? All these people get trapped. And the market starts to come right back down. Now I know after this down candle, once we make this right here, I also know that this is a lower low and lower high. Right? Here we have here to here. I can see that the market traps just a little bit, comes all the way up, right? This could have been nice 61 pip move, right? The market did not induce just yet. It looks like because we've taken out this low, we can use this point as a zone, right? Because we're following the money and the market starts to come down. Now, if you didn't know that you could pretty much track the market on the daily like this, hopefully this is very helpful, right? Gives you a pretty good understanding of how to read the market. But anyways, the market comes all the way down, induces this low, traps all the sell stop orders here, and the market moves up, traps again, right? And let me show you how this works, right? We trap right here, right? Because we've taken out this high, this can become a demand zone, and that is why the market continued to go higher, right? Because we're following the money. Now, price comes all the way back up, induces this high, traps, and the market comes back down. Now, of course, there are internal highs and lows here that probably cause a price trap right here, such as this low, this high, right? And it traps the market. Now, generally speaking, I do have a little bit more of a methodical method that I use using the fractals. I'm going to let you guys figure that one out on your own. right? And you can use those fractals across multiple time frames, right? Now, let's continue. All right, and let's continue just with the daily highs and lows because as you can see, you can use this on a fractal basis, right? What happens here? I want to show you guys again what happens. We take our point of resistance, the market ever so slightly, or at least I assume it is. Just check real quick here. Get this to the T. Ever so slightly, right? Buy stop orders get triggered, the market gets trapped, and the market starts to move down, right? And then that chain reaction occurs. And then we definitely trap out a bunch of buyers there. And as you can see, it has caused this whole move to occur. So as you can see, price traps are extremely powerful and can give you some pretty powerful moves, especially on the daily and 4-hour chart. I highly recommend trying to use this method on all time frames besides the 1 minute. You can use it on the 1 minute. It's just a little bit more difficult. And I don't want you guys to get lost in everything that there is on the 1 minute using this type of criteria. Anyhow, coming back into it, right? This high made this low, right? As we can see, sell stop orders still get triggered, price still comes back up. It may not look like it's anything, but in reality, that's still almost 50 pips, right? Now, we don't really know exactly how price moved, right? It may not have been a 50 pip move. However, I don't really want to go all the way into the lower time frames to figure out what caused this to come up. But generally speaking, once we induce a higher low, we are looking for confirmation across all time frames and our entry on the M1, right? Anyways, you're going to see this process repeat over and over. Of course, it doesn't happen every single time. You can see price trap, price comes up, right? And then we're just repeating this over and over and over again. When we have a full break like so and a candle closure below an inducement, right, we can actually expect price to continue lower, especially if we're breaking a point of support. If we were to have a candle closure above a point of resistance or induce a high, right, we can expect price to keep going higher. In reality, what I would have wanted here after this candle closure would have been price to retrace back into this point of interest, this area here to go shorter. Unfortunately, price did not give us that type of reaction and broke with enough momentum for it to just keep falling. But that's what I would have wanted in reality if I were trading this real time. Now, let's keep going, right? I want you guys to notice this is another daily high to a daily low to a daily high. And what's constantly happening? Price trap, right? The market does what? 1, 2, 3, 4, 5, 6, 7 days drop, right? So just understanding that price has been trapped here can tell you throughout the entirety of the week, the market should be shorting, right? Generally speaking, the market will either short to this point, or because we have taken out a high, and this is the extreme that took out this high, this demand zone, right, is the reason why price went higher. Does that make sense? Do you guys have a little bit of a better algorithmic understanding of how the market moves? I hope so. And as it come and take out this high, we follow the money, the market rockets back up, takes out this high, we induce these highs, buy stop orders get triggered, buyers get trapped, and the market explodes again, right? As you can see, you get some pretty crazy moves. You definitely do get the largest moves on reversals. I honestly prefer continuations. Generally speaking, they tend to be a little bit more probable for me, and the setups generally tend to be a little bit cleaner. However, you will definitely catch the overall move and or the reversal when you get price traps, right? Let's continue these last couple ones, and hopefully you guys had enough examples. As you can see, here's a price trap, right? This is a little unclear to me. I don't know if I would trade it. One thing that I teach my students, all right, is that if something is not clear, if there's no clarity to the setup, or at least if it's not clear to you, then you shouldn't be taking it. You will know what your setup looks like in a snap of a finger, right? And if you can't really identify your setup like that in a snap of a finger, you shouldn't be trading it, right? Anyway, here's that price trap. price shoots down, right? And the same process basically just repeats. As you can see, like I said, I want to point this out one more time. Here we have a candle closure. Instead of a wick, we have a candle closure, telling me that because we've closed below this low, this inducement here, it's what's going to allow it to keep dropping, right? Now, what can we expect now? Well, we have induced this low. And yes, sometimes based on this scenario, we induce the low, we are heading up higher. I actually was expecting, shorts to occur in this area. It looks like the market already reacted, right? And now the market's starting to come back up. But if the market does take out this high here, right, well, then I will switch my bias either to continue to take all this out or we're going to follow the money, take out this low inducement into this POI and then rock it back up. So either one of those scenarios. All right. And as you can see, this is also an AMD cycle just on the daily chart. The market's fractal. The same setups occur across all time frames. But just understand that the higher the time frame, the more probable it's going to be, right? The higher time frame is always what's going to drive your analysis, and it's always what's going to drive your trading, right? The M1 is really only used for entries, or at least for me. A lot of people do disagree with me, but I tend to use all time frames. I go from the monthly, weekly, daily, 4-hour, 1 hour, 30-minute, 15-minute, 5-minute, 1 minute, seconds. I tend to use all of it, right? And that's just what helps me. I know everybody's different, but I really hope you guys enjoyed today's video. If you want to see more of my setups for free, right, please go follow me at seisners.trading.journal on Instagram. If you guys enjoyed today's video, please leave a like, please subscribe. It helps us out a ton. And I'm hoping to bring you guys something special next week. But until then, peace.